Looks like we're ready. Okay, we should be live. Please let me know that the audio is working. I'll be testing it myself. It seems to be appearing. We seem to have audio. We seem to have footage. That could be a bit of a miracle if that's all working. Very sorry that there's always a bit of delayed start. Okay, so guys, today we'll be talking about Cineworld being for sale. Obviously, we have the latest announcement to go over, and then also we'll be going into what does for sale mean. So this is the topics for this week's episode. We've got what does for sale mean for shareholders, us. It's different for people with different averages, obviously. So we'll be talking about that, about at what point is this a really... basically who's this best for, but what does this mean for shareholders? How much dilution will there be? There's two main outcomes that I'll get into straight away at the beginning of the episode. When we will have answers. Right now we're thinking 1 month, so I'll be getting into why we think 1 month. And then when can we exit Chapter 11 bankruptcy? So that will be where we go into more detail about when debt is 5 times EBITDA. What does that mean? Why does debt need to be 5 times EBITDA? What is EBITDA now that we are in 2022? And why Cineplex aren't a creditor on the Chapter 11 bankruptcy. So let me just check that we have audio. Great. We actually do have audio, it seems. And I seem to sound all right, so I'm actually holding the mic correctly this week, which is great to know. So, by the way, just before I get into the episode, please leave comments, asking questions, and I'll try and answer all of them in this week's episode. Okay, and so now this time I'm going to pull that aside and just look at you guys. There you are. Sorry for the messy room behind me. Now, the first thing I want to talk about, what does for sale mean? Well, we believe there are two main outcomes that both will result in 20 to 30p, or obviously there's still a chance of 0, and we'll get into how 0 could happen also. Actually, I'm just gonna, sorry for moving the screen around. There we go, put that there so I can bring it back whenever I like. And then hide it. There we go. We think 20 to 30p or 0. The reason that we think it will be 20 to 30p is likely that creditors will not want equity for shares. Debt for shares or debt for equity. And so that's a good thing for shareholders, because then we have leverage that they don't want to do that trade-off. They actually want to get their debt back. And so you've got to look at it through the lens of how do creditors get the absolutely most money. And that is through a couple of ways. And so one of the things that I think is quite promising that we're talking about today in the Discord, also in the Discord, if you join, everyone that's in the Discord is putting in how many Cineworld shares they have. I've got a spreadsheet, so if you join the Discord, just ask me for a link to the spreadsheet and you can put your shares in. We currently have something around, I think we found out that the Discord actually holds 0.6% of the stock, and we actually hold over 1% of the stock if you include one of the people in there. He manages a fund, and inside that fund he holds even more shares, and so we actually hold in the Discord over 1% of the business. And I'd love to get that growing. I'd love to have the Discord now owning 5% of the business. If we could get it there, that'd be wicked. So yeah, join the Discord, put how many shares you have, and also you get to join the discussion. But what we're talking about today, the monkey, the largest shareholder in the Discord, he has 2 million shares, and he shared us a screenshot of that. He was sharing lots of really great information, and one of the great points that he brought up was the fact that at this point you would typically expect shareholders already to have lost equity for credit, and that is because typically stocks do not have a board of director chairman that holds a 20% stake in the business. And so I think it is whatever the outcome is, it's clear that the stakeholders have been fighting to retain equity of the stock, because I don't think we would be here today if they weren't. And so one of the things that I think that I learned today was that the bankruptcy. So what has happened recently, and I'll link all the information will be linked on the video in the description at the end of this. I've just been collecting the information, so yeah, it's not in there right now, but I'll add it after I go off air. But yeah, so there's basically a document from the debtor. From the Chapter 11 filings that shows that all the debt has been moved away from rest of world. And you can actually go to the debtors, you can see the list of debtors, and you'll notice that none of the debtors are the rest of world. So basically, this is why we think of those two outcomes that we heard about earlier. One of them is that we lose Regal and we lose a significant amount of debt. Basically, we have no debt. We lose Regal, but we have no debt, and we just have rest of world. And then the question becomes, what is rest of world worth with zero debt? And the answer, that's probably, that we loosely came up with, it's a loose guideline, is 20-ish p. Is what we think rest of world would be worth. Just bear in mind, rest of world does not include the UK business. So the only debtors right now are the UK business and Regal. And so, that's all we feel we stand to lose. That's the maximum we stand to lose. Now, the second outcome is giving to creditors the Chapter 11 group, is preserving the group but with significant dilution. And so that's what we spent a bit of today trying to work out in that event. What would how much would existing shareholders lose out? So yeah, the second outcome is actually the one I mentioned first, which is we are just left with rest of world. And the first outcome is we preserve the group, but we have significant dilution. So all of us shareholders own some stake of US, UK, and rest of world, but they give off a ton of shares in order to pay down the debt. And what they would need to do is, in order to get out of Chapter 11, as I mentioned at the beginning of this video, in 1 month's time, we would need to lose enough debt to get down to ×5 leverage over EBITDA. So EBITDA, earnings before interest, taxes, depreciation, amortization, I won't get into what that means, you can just Google it, is around 25% of revenue in 2019. So basically, what they need to do is work out what revenue is now. It wouldn't be wise to take the 2021 revenue. You'd want to take the essentially trailing 12 months, and we do not currently have access to that. So what we were sort of roughly thinking was that revenues in 2022 could be projected to be 3 billion based off of Avatar and various other factors. And so you have an EBITDA of 750 million, times that by 5, and now we're testing my maths here, but basically what we got to was also you have to factor in that there is more debt now, because the debt number that we managed to get from their June filings the exact amount of finance debt they had. So how much debt did they actually owe in finance debt, not lease debt, nothing else other than sort of finance debt. We took the net finance debt, and then you can imagine that there's a lot more debt on top of that because they got the debtor in possessions, and also that was back in June that they issued that information. That's where it went up to. So we projected around 6 billion in debt and said, okay, now they should have 4.5 to 5, but we think that the judge might be lenient to these guys and give them a little bit extra leverage so that they don't have to have as much dilution. But it really seems like if they do that, that will mean that the Mookie and existing shareholders and the existing board of directors are really fighting for shareholder equity if we have a high leveraged business coming out of this. But what we were looking at was around potentially up to, we are thinking 1.5 billion. Also, we were projecting high amounts of debt and we're projecting sort of large amounts of dilution, but we're saying existing equity holders could go up to their current shares could go down to 4% of what they used to be worth. That is sort of being quite harsh with the numbers, but it is a potential outcome of the preserving of the group, but with dilution. The fact is that you would need to give up to 1.5 billion of equity away. And that would mean that's how many shares you would need to print in order to do that, to get the existing company to that point. Is we existing shareholders would be left with 4% of the company. And so you can do math to work out what that is. Basically, if your average is 3 or 2p, there's almost no way that you could possibly lose. But if your average is higher, 20p up to 50p, then I think you need a lot more luck to get you guys back up to that point. Right, I'm just going to take a look at the questions. Checking that the stream is streaming still. Yeah, it looks all good. By the way, guys, join the Discord. Check out all the information that we're posting, because I could easily be wrong on some of these things. I've certainly learned a lot today. I've been doing Cineworld research for months, as you can tell on YouTube, and I am still always learning new things. So the next thing I want to talk about is why Cineplex will get 0. So the fact is, unless Cineworld are profitable, Cineplex will get 0. And this is something that we are now very, very confident on. I'm close to 99% confident on this. I need serious information to understand why Cineplex will get anything unless Cineworld are a profitable business that retain together. So first of all, the only people that seem to owe Cineworld now are the Chapter 11 group. So it will be Regal and UK Business that owe Cineplex money. So if we come out with outcome 2, then we'll have a business that doesn't even owe Cineplex money. If we go with outcome 1 and we keep the group together, well, this is what it says in the original Chapter 11 filing document. Any amounts owed to Cineplex will rank alongside the company's other unsecured claims and will be determined as part of the Chapter 11 cases. And so if you don't know what unsecured claims are, Cineplex actually filed a motion to become a secured claim, so they become, say, secured debt. Cineplex are kind of like a shareholder in Cineworld now, and that they are entitled to the profits, but they are not a creditor. So basically, Cineplex have absolutely no incentive whatsoever to do anything to dismantle or derail Cineworld. I had a better explanation in my mind to sort of really get you guys explain that in perfect detail, but basically we don't have to worry about Cineplex, in my opinion. Please feel free to share your own information, but Cineplex are only owed money if Cineworld are operational and profitable. I don't see, that's the information, that's the hard facts of the day that we've been learning and doing loads of research on. We've been went through a 32-page. Someone went through a 32-page document and found information. Like, it's crazy, but yeah, that's the main information of today. But then what I want to talk about are just a couple of my theories, loose ideas of what I'm thinking about that might happen over the next month. Oh yeah, and we think it will be coming at the end of 1 month. I personally think that there's one bit of the Chapter 11 document. Cineworld currently anticipates emerging from the Chapter 11 cases during Q1 2023 and is confident that a comprehensive financial restructuring is in the best interest of the group and its stakeholders. And I certainly think that Cineworld are acting in the interests of its stakeholders. So we could potentially far exceed that 20-30p thing. But obviously when we're doing these estimations and valuations, what we're trying to work out is what we want is a stock which has its worst possible outcome is extremely good. Obviously, the worst possible outcome for this is 0, but that is why it's a particularly encouraging lottery ticket. One of the theories, by the way, so they are looking at 30 buyers for the business. Now, what a lot of people might assume is that they are looking for 30 different people and saying, hey, 30 people, what's the highest bid? Who wants this stock the most? I actually think, I'm going to pour myself a whiskey quickly. I actually think that they are potentially getting a group of buyers together, and these buyers will become how do you say this? A trust. Their money together will be pooled, and then they will invest into Cineworld collectively, purchasing 1.5 billion in debt, getting us down to the leverage to equity we need to be comfortable to not ever have to go into Chapter 11 filing again. And that group will potentially also have some of Mookie's money in it as well. So he potentially will be purchasing the debt of the business. But I think he still has plenty of incentive to keep his 20% stake as large as possible. And I'm not even sure that he can purchase the stock, but maybe through a trust he could. But yeah, that's my theory, is that they will be collecting a pool of money together to purchase the business. Right. Ooh, when you're talking about money, do you mean pounds or dollars? I'm talking in pounds and pennies. So you got to be careful that I'm talking in pounds or pennies. Would you hold your shares until next year if we keep rest of world? Absolutely. Although it would have to be rest of world without debt, without risk of Cineplex. But yeah, I would keep my shares if it means that we just hold rest of world. It looks like we're effed, so sad. I am not that skeptical, but the two outcomes are, I think that, they're not joking when they say significant dilution. We do need to be realistic about that. I think the projections that we did today, the idea that we could go down from having 50 million representing 100% of the company to representing 4% of it, that would put the valuation of the business 50 divided by 0.04 being 1. That would mean it is a 12 billion. Have I got that right? A £1,250,000 company potentially. I think there would always be a reason. I think certainly buying it at 3p, it's like a really, really, really good bet. The question is whether you average down or not, and that's going to be a really personal thing to you. I am still waiting for more information. We only have a month to wait, I think, until we get that information. That will make it either, for me, throw in everything I got at it. I would never do that, that's just a strategy, but I would never throw everything I got at it. Some of you in the chat are doing it, and I don't encourage that. But it's your money. Guys, if you bought in at 60, 70p or above, remember it's now really cheap to average down relatively small amounts. You can average down a lot, obviously. Do so at your own risk. Yeah, that's good advice. It's a true point. Obviously, and also there are other ways to invest in cinema, by the way, and you can invest in those in the meantime, and then you could move the money into Cineworld when you became more confident. Certainly think about it, that like that money you've got on Cineworld right now, you got to imagine that you're buying it at 3p, and I think you have something worth holding on to. But it does depend on, don't gamble, just be responsible. And yeah, if you're not enjoying yourself, like if you're not enjoying your life, I think you potentially did overinvest, and don't worry too much about that. Don't give yourself extra stress. Just continue learning and make sure that you I don't think it's finances is anything that you should ever cause you stress or should disrupt your sleep. And so while that's inevitable in some nights, I think you've got to make sure that you've got to sometimes see that you have not diversified enough occasionally. Problem with that is that when info comes out, 3p will be long gone. It's impossible to time this. Yeah, but the market is very irrational, and I think we are likely, if you're staying on top of this Discord and this chat, I think it's likely that we will gain information potentially before the mass market does. And so I think there'll still be opportunities to buy in at 5p and 10p and have the confidence and ride that up to 20p. But obviously strategy is very different from valuation. So this is just my information. These are my random thoughts. I hope you enjoyed this episode. I'm going to keep this one short and sweet, guys. Thank you so much for joining. And please leave comments on this video of your thoughts. And any questions you have, I answer all of them. Also, love to have you join the Discord and put how many Cineworld shares you have there. And then we can get the Discord up to owning 5% of the business. That'd be epic. Right. Cheers, guys. Have a good week. Chat to you soon. Oh, one question. What's the latest situation with the appeal to the original Cineplex court judgment? You're saying Cineplex are owed money if Cineworld are profitable, so we're accepting the original court judgment. Right now, the appeal is ongoing, so Cineplex likely... there's also, I've been sent an email today. I don't want to get into it because I haven't had a chance to work out if the information is actually significant, but it seems interesting that they've got evidence that the judge on the Cineplex case knew someone that worked in cinema and was a sort of cinema legislator or lobbyist. And so they've got evidence that there's a little bit of corruption going on there. So there's so much that could happen there. I think likely my guess that I haven't properly formulated this or created a spreadsheet or anything is like they'll settle on something like 300 million. But Cineplex will certainly get nothing if they go bankrupt. It's not like the fact is that unless it's like written into law that they should get nothing. So like even if there's a debt for equity exchange with creditors, Cineplex would definitely get nothing. So the fact is that Cineplex need Cineworld to become profitable in order to get anything. So don't worry about the Cineplex thing. Just worry about Cineworld getting out of Chapter 11 bankruptcy with as much equity as possible. And it seems certainly with the research that we've done today that above all else,